Okay, so picture this. You're just, casually scrolling through your newsfeed, and it's Thursday, April 9th, 2025, just a little afternoon here on the East Coast, and boom, you see this headline.
Oh, yeah.
It's not some, abstract economic theory. It's like a punch to the gut.
Right.
China just slapped an 84% tariff on everything coming from the U.S.
Wow.
I mean, everything.
Oh,
You can
yeah.
almost feel like the gears of global commerce just grinding to a halt with that one announcement.
Yeah. No, you're absolutely right. I mean, this wasn't just like some, minor adjustment. This is a major earthquake, a seismic shift. And I think to really wrap our heads around the magnitude of this, we have to go back and remember what even set this whole thing in motion, right? This 84% tariff, it's a counterpunch.
Exactly. And that's why we're here today. We're doing a deep dive into this escalating trade war and this latest move by Beijing. It's a direct response to President Trump's decision to hike tariffs on Chinese imports to a staggering 104%.
I mean, can you imagine that it's over 100%?
Right.
This is not your typical trade dispute. We're in some uncharted territory here.
Absolutely. This is like a rapid-fire exchange of economic blows, and we're going to break it all down. So to do that, we're looking at reports and official statements that have just come out detailing these tariff actions. And, I mean, the immediate fallout has been dramatic,
Oh, yeah.
hitting markets across the globe.
Yeah, it's a global phenomenon at this point. And that's really what we want to get into today. Like, our mission for this deep dive is to look beyond just the headlines and really grasp the significance of this escalation and what the potential ripple effects could be down the road.
Yeah, so let's rewind a little bit. Let's trace how we got here, right? Not that long ago, China had a 34% tariff on U.S. goods. Then, boom, practically overnight jumps to 84%.
Yes.
On the flip side, the U.S. went from, existing tariffs to this massive 104% on Chinese products. The speed and the scale of these increases, I mean, it's kind of breathtaking.
It's unprecedented. And you know what I think is really revealing is if you look beyond just the raw numbers and you look at the language coming from Beijing, when China's finance ministry announced this 84% tariff, there was a tone, there was a weight to it.
Oh, absolutely. There's a definite sense of, we're not messing around.
Resolve.
Yeah, and then you have, Foreign Ministry spokesman Lin Jin using some incredibly strong terms. He talked about safeguarding China's inalienable right to development and their sovereignty, security, and development interests. This isn't just about, balancing some spreadsheets anymore. It sounds like they see this as a fundamental, existential issue of national importance.
Yeah, it's really interesting when a nation invokes its inalienable right to development. It's framing this economic dispute in a whole different light. It's almost like an existential matter. Like they're saying this is not just about trade barriers. This is a challenge to our very progress and standing in the world. And that kind of language signals a really deep conviction and a willingness to endure, quite a bit of pain to get what they believe is their due.
And they definitely weren't subtle about their intentions either, right? Promising firm and forceful measures to protect those rights doesn't exactly sound like a nation looking for a quick off-ramp.
No, it conveys a real, calculated decision to meet the U.S. action with a response that's not only, significant in economic terms, but also sends a very clear message that they're unwavering in their stance.
But here's where things get really interesting.
Right.
Right at the same time that these massive tariffs are being rolled out, the Chinese state news agency Xinhua releases a statement suggesting the possibility of equal dialogue to resolve these differences. It's almost like whiplash.
Right.
It's like, wait a minute, what just happened?
It is a stark contrast.
Yeah.
You have these really aggressive economic measures being implemented, which are by their very nature confrontational.
Yeah.
But then at the same time, you have this interest in equal dialogue and mutually beneficial cooperation. So it really begs the question, what does that even look like in this kind of context?
Yeah, exactly. How do you have a calm conversation? Let's be reasonable after I just punched you in the face, And then to make things even more complicated, Beijing's Commerce Ministry also weighs in talking about their firm will and abundant means and their readiness to fight till the end. How do you have a meaningful conversation when that's the declared starting point?
Yeah, this apparent contradiction, I think it raises a really important point about the aims behind this call for dialogue, right? It could be genuine. They do want to find a resolution, but it has to be on their terms from a position of strength, or it could be a strategic maneuver to make them look like the more reasonable party on the global stage.
Oh, interesting.
Right, while still pursuing a hardline approach through these tariffs. And I think the emphasis on equal dialogue is really important, too. And it implies that they're seeing themselves as, on par with the U.S., which is a very significant statement in itself.
Yeah, it feels like a really high-stakes game of chicken. with both sides trying to prove that they're willing to go the distance. But let's talk about the immediate fallout. We saw some huge reactions in global markets just yesterday on Wednesday, April 8th.
Yeah, and markets are a really good barometer of overall concern. And across Asia, we saw big declines. Japan's Nikkei 225, a key indicator, dropped almost 4%. Taiwan's TAIEX index even worse, almost 6%, with major tech companies like TSMC and Foxconn taking huge hits. And then South Korea's Kospi also declined. And notably, the government there announced potential aid for its auto industry, so they're clearly seeing this as a real threat.
Wow, and it's not just Northeast Asia that's feeling the heat, right?
Yeah.
Australia's S&P ASX 200 also down, and we even saw losses in New Zealand, India Sensex, despite a recent rate cut, which is interesting, and Thailand's SAT index. It's like this ripple effect of unease spreading across the entire region.
Right, and it really, I think, underscores this idea that when two economic powerhouses like the U.S. and China go head-to-head like this, that uncertainty doesn't stay within their borders. It creates this ripple effect across the globe.
And Europe definitely didn't escape the turbulence, right? We saw Germany's DAX, France's CAC 40, and Britain's FTSE 100 all registering significant losses, about 2% each. It really highlights this global sensitivity to these kinds of economic shocks.
Right, they're so intertwined with those global trade flows that any disruption, especially when it involves two of the biggest players, is going to send shockwaves.
Right now, turning our attention to the U.S. markets, we saw S&P 500 and Dow futures taking a dip after some really erratic trading on Tuesday. I remember the S&P had this huge swing going from a gain to a sharp loss by the end of the day. That kind of volatility really signals a lot of anxiety.
Oh, yeah. Investors are clearly on edge trying to figure out what the future holds for trade policy and how it's going to impact corporate earnings and the overall economy.
Right, but here's where things get really interesting. Chinese markets actually went up on Wednesday. Both the Hang Seng in Hong Kong and the Shanghai Composite recorded gains. What can explain that?
Well, the word on the street is that Chinese regulators encourage state-owned companies to buy up shares.
Really?
So if that's true, it would suggest they're trying to project an image of stability to their own people in the face of all this international turmoil.
Wow, that's a stark contrast to the negative sentiment we're seeing almost everywhere else. So let's rewind a bit to understand how we even got to this point over the weekend. President Trump had implemented a 10% tariff on a very broad range of imports. It was a really sweeping measure.
Yeah, a real signal that he was taking a much more confrontational approach to trade.
But then, incredibly quickly, those general tariffs became much more targeted. By Wednesday, we had customized rates for almost 60 different economies, ranging from 11% all the way up to 50%. And of course, then came the 104%, specifically for China. It's like the initial announcement was just the opening act for a much more targeted, and in China's case, extremely punitive set of measures.
Yeah, it suggests a much more strategic approach, targeting specific relationships or addressing perceived imbalances with individual countries.
And we did see that brief glimmer of optimism in the markets on Tuesday. Tokyo, Paris, Shanghai all saw gains. It was almost as if there was this hope that this was all just a negotiating tactic, but that optimism vanished once the reality of these new tariffs set in.
Yeah, that shows just how much is riding on each development in this trade war.
So let's talk about the real-world consequences. How might China's 84% tariff actually affect businesses and consumers here in the U.S.?
Well, for U.S. businesses, whether they're farmers, manufacturers, exporters, it's going to be a lot more expensive to sell their goods in China, which means less demand for American products, and that's going to hit their bottom line pretty hard, especially for industries like agriculture who really depend on that Chinese market.
And on the flip side, how is that 104% tariff on goods coming from China likely to affect consumers here?
Well, that means higher prices for a lot of everyday things. Electronics, clothes, toys, anything with that. Made in China label could get a lot more expensive. And that means either retailers are going to absorb those costs and see their profits shrink, or they're going to pass them on to us, the consumers.
And this isn't just a U.S.-China issue, is it? You mentioned the broader global impact earlier. How are other countries and industries being affected?
Yeah, we're already seeing the effects in the markets, but this is going to be especially tough on tech companies that have those global supply chains that rely heavily on China. Semiconductor manufacturers also feeling the pressure, and luxury brands that sell to both the U.S. and China are going to be caught in the crossfire.
So where do things stand now? It feels like we're at this incredibly tense standoff with both sides digging in their heels.
I think that's an accurate assessment.
Yeah.
China's made it very clear they're ready to fight till the end, and President Trump hasn't shown any signs of backing down.
It creates this crazy atmosphere of uncertainty. What's President Trump's next move? Will China retaliate even further? It feels like we're at a real turning point.
Yeah, the stakes are incredibly high, Any move by either side could have major consequences for the global economy.
So the big takeaway here is that this trade war between the U.S. and China has just escalated dramatically with these massive tariff increases, the market reactions on April 8th, and then the implementation of these tariffs today on April 9th really show how serious this is.
Absolutely. The speed, the scale of it all, and the rhetoric coming from both Washington and Beijing point to a really worrying new chapter in this conflict.
And it raises a big question for you, the listener. What do you see happening next, given where both sides stand right now? What are the possible outcomes, and how might these tariffs reshape the global economy and our daily lives? It's definitely something to keep thinking about.
This is a situation that's changing rapidly and has the potential to really shake things up. So it's important to stay informed and keep analyzing what's going on as we navigate these uncertain economic times.
Absolutely. All right, that's it for our deep dive today. Thanks for joining us.
Thanks for having me.
We'll be back soon to break down more of the latest developments in the world of global economics.
Sounds good.
Until then, stay informed and stay engaged.
Absolutely.
See ya.